All right. So um I'm going to be looking into market structure. I'll quickly run into these three: market structure, inducement, and POI. All right. This is all I've been looking at, Reggie. So what I wanted you to be so that you would um still like get a quick recap. All right. So market structure, basically we have three types actually. We have the uptrend, the downtrend, and we have a ranging market, which is a sideways market. All right. We have a ranging market, which is a sideways market. The market does not go anywhere. Okay, just stuck between the range. So now um this we know that market is creating higher highs. All right, we are creating higher highs, higher lows. All right, higher highs, higher lows. All right, then in a downtrend we are creating lower high. All right, lower lows, lower high, lower low, lower high, lower low. Okay, now the thing is that now in this ranging market we are just stuck between what a resistance and a support. All right. But now there's something about the algorithm, how this market structure moves. Now, pay attention to what I'm going to do. Now, for the up trading market, I'm drawing this diagram: higher high, higher low, higher high, higher low, higher high, take out this low, then up. Now, I'm going to pull out two zones here. All right. I'm bringing out this narrative now from a ranging market down here. Zone one, I'm going to make that gray, then zone two. That is how market moves in a uptrending market. Now, for a downtrending market, lower low, lower high, lower low, lower high, yes, lower low here, then here. What's going on? Okay, yes, this is it. So, like this, okay, this is how it moves for a downtrending market. All right, and now, when it gets here, then we see our what sales for a downtrending market. Okay, so this is the algorithm on how price moves. All right, so now that is all for market structure because it's a quick rundown. All right, so what you want to see when the market is moving, you will want to see higher highs, higher lows, higher highs. Then you want to this point now. It now takes us to number two, inducement. Now, what is your inducement? Your inducement is your first pullback after a break of structure. Inducement is your first pullback after a break of structure. Okay,
Wait, I mean,
your
your tongue, I
inducement
beg.
your inducement is your first pullback after your break of structure. Now, what is your break of structure? Your break of structure is simply when market takes out the previous higher high. All right, let's say in the uptrend market takes out this higher high. They are telling us now that this demand here was strong enough to push this high. So we broke above. So that's what the break of structure. So now market is coming back down. We are retesting previous structure, changing that structural point from a level of resistance, now changing to a support to go hold price back up again to next level of structure. All right. So structure is basically any price turning point, any recovery, any price recovery point. All right. So in this case now, where is the structure now? These are market structure, these are market structure, these are market structure, these are market structure, these are market structure. Okay. So that's why now you are reading it now that okay, this is like $2, $4, $5 because we are having higher prices to the upside. Okay. So same thing is here. We're having what lower prices to the downside. Okay, we're having lower prices to the downside in this case. So now what's how is our structure breaking here? We are breaking structure to the downside. We are breaking structure to the downside and we are expecting higher structure. Now a change of trend now happens when we're having a lower low, a lower high, right? A lower high, a lower low. Then now market fails to hold this lower low. Once you have changed like this, that is now what a change in trend. So we are not likely to start seeing market making higher highs and higher lows. So we have now moved from a what downtrending market to a uptrending market. Okay, so now that leads us back here. Okay, so now we know what a break of structure is. Okay, so now your inducement is your first pullback afterwards a break of what structure. Now note and take this. Now I drew two black boxes here. I'll tell you what these two black boxes are on the next level, which is what POI. Now your inducement is what your first pullback afterwards a break of structure. That is to say that if we're having a downtrending market now, I'll notice that oh, there is a new break of structure, just like so. Now the first pullback is what your inducement. Now what is your inducement? I'll call it this is a it's like a let me just the simplest form I can put it is like early sellers. A market usually takes out these early sellers the market in this bearish case scenario. You know that. So since we're expecting these early sellers to get taken out, we mark this level as what our inducement. Now once you're marking this level as your inducement, okay, market usually now trades back up into this level of inducement, then sells lower. That is now fulfilling the what? The market what? Structural plan. All right. This is what market truly wants to do. So once you have already spot what? Your break of structure. Look, we broke structure here. This is our break of structure. The next thing is our inducement, which is this line here. Okay, let me use different colors and make it big. Okay, that was the break of structure. I'll make the break of structure blue. Okay, break of structure. This is the inducement here. Am I making sense?
Yeah, yeah.
So that's break of structure. Now this is the inducement. So now market now pushes up to something. Now that something that market is pushing us up is now leading us towards the number three thing I'm going to teach you now. This is me summarizing the whole everything about trading for you. All right, everything. So this now pushes us to a point of interest. Okay. Now on your point of interest, we use two things, order blocks and what breaker blocks. First of all, I will go with what, or I will first of all explain breaker blocks because we are very familiar with what supply and demand. Now what is a breaker block? Now first of all, what is supply and demand? Let me remind you. A supply zone, for example, now is a zone that there were a lot of interested sellers that triggered a sell momentum and that left imbalance in price. This is imbalance. Then now market usually trades back into that supply zone to continue selling lower. Okay, because this is now the supply zone. But now what now makes it a breaker? The time that this supply is not failing to hold, it now flip the zone. Now remember there were sellers active here before, so we're now turning these sellers to buyers now. So this is now what's used as a breaker. That is what is called what a breaker block. Now what is an order block? An order block is the last up candle before a bearish move. That's to say now that we have, let's say we have let's say we have a uptrend now, higher high, market is going up. This is market going up, market is going up. All of a sudden we just had one bearish candle that just came out of nowhere just like this. All right, now make that candlestick red. Okay, I'll make it red. Okay, so now that is the last berry. So now how would you now mark your order block in this case? This is your order block, your last up candle before the bearish move, because market now tends to trade into that zone to sell lower. That is your order block. So these are the 2 points of interest we are now going to be focusing on. Now that leads us back to this image that I drew here. Are you getting me?
Yeah.
Now back to this image that what I drew here. What are you seeing here now? In this case, this is a supply zone before. Remember, this is a supply zone before. Market in here now, see what market did. Market came up, then sellers came in. So at some point, there were sellers here. Are you getting me right now?
Yeah.
So now, the time that these sellers are using to flip away from here, that means for this market to move up for me, that means there was a last down candle here before a up move that happened inside here. So automatically, we are leaving this point here. This lower point will be your demand, and this up point is your breaker. So it is only these two areas that market is going to be using to move. Now, where is your inducement in this case? Your inducement is the first pullback. All right, this is your inducement, the first pullback. This is your inducement, the first pullback after your what break of structure. After your what break of structure. Now, I know what you are wondering now. You see some cases that How would you now know when? Because the rule is not to enter a trade if you don't see an inducement. The truth is that on the lower time frame, when market is breaking here, if market want to use this up, on lower time frame, you will see market make its own structure here. That is to say that market has already pulled back low key, that has made a pullback there, that wants you to come and touch. Do you understand what I just did there?
Yeah.
So that's what will be happening on the lower time frame, right? That going to be happening on the lower time frame. But on the higher time frame, after that move has not played out, on the higher time frame, you will now see that, oh, it was just one leg, and now this is now the pullback. So this is why the market now needs to come back down again before it now moves again. Now this particular point is now serving as, is now still serving as the inducement for this other block to move up. So on the lower time frame, there will be structure play here. All right, on the lower time frame, that will give you that first fake break of structure that you use to catch price from this first breaker. Now let's look at the live chart. Let it make more sense now. Okay, let me use this gold do an example. Let me open a fresh gold chart. Okay, so now what do you see happening here on gold? For example, now you notice that first of all here we can identify the trend where we are bullish, like in general we are bullish. So we could say this is a deep pullback probably, or market would continue selling low. We don't know. We want to just like day trade and take our profit. Then we don't want to predict. But now what are we seeing happening here? We are seeing that we broke structure. All right, we broke structure, and now ever since we broke structure, market did not visit this zone. Okay, let's just cut the story short. We are currently now we are reacting off this demand zone. All right, and now that demand zone broke structure to the upside from here, and now it broke further structure to the upside. That's two structures have been broken there. All right, we broke the structure and we broke this structure. Now remember, your first pullback is always fake. Okay, your first pullback is always fake. Look at it from this perspective. If I should draw this thing out now, you see something like this. This was a lower low, lower high, lower low, lower high, lower low. Okay, what is happening here now is that this, you see this zone, here, this high, you see this candlestick was lower, this thing was a pullback. So market did this and went up. If I should pull this thing outside for you now, you see that schematic that I was explaining for you is the same thing that is happening here. Okay, it is the same thing that is happening here. Are you guys following me? It is the same thing that is happening here. Are you with me?
Yeah.
So you will see that it is the same thing that is happening here. All right, that is this price action. It is that same in downtrend, lower low, lower high, lower low, lower high, lower low will sweep the high, right? Then
Yeah.
start coming down. Then for a uptrend, higher high, that in this case now that we're seeing now, higher high, higher low, higher high, higher low, higher high, sweep this low, then go back up. All right, that is,
Okay,
look at
sorry.
this thing
So
now.
for like this one that you drew now, this first one that you drew out from this chart,
Yes,
this is like a breakout, yeah, Chevy.
yes, this is a breakout. What happening here is that, see, the thing is that what is happening in this particular picture now, okay, in this particular picture now, let us study what is happening here. Remember, we had a reference from the higher time frame that we hit into a demand zone that is likely to take price upwards.
Mm,
Are you getting me?
yeah.
In general, we are up, we are bullish. The problem is that once you guys are zoomed in on your chart, you always forget what is happening on the bigger picture. We know that we are expecting movement from bullish movement from here. So now, on no account should you now be looking for continuous sales, even after we are making lower highs and lower lows.
Okay.
But now, what I'm noticing here is that this schematic is still the same thing as this. That's why you don't The problem now is that I know as I teach you this thing now, you want to go and be cramming this pattern rather than understanding it. You don't cram this pattern because it's not always going to look like this. Like this pattern now, let me delete this one or let me move this one to another side, like as if I'm not seeing this pattern. You see this pattern that I drew from here? It is this thing, it is this exact same thing. All right, it is this exact thing that is this. I can prove it to you. The only source that they just added here is that the trend was showing here. Are you seeing something that's happening now?
Yeah.
Now, what are you identifying? I can identify what a break of structure. What can I identify? I can identify what a break of structure.
Mm-hmm.
Can I identify the first pullback? I can
Yeah.
identify the first pullback. This is the first pullback. Where's your first pullback? This is your first pullback. Are you getting me now?
Yeah.
Now, and I told you that your first pullback, you are seeing market moving from what a breaker. Then the next time, market is going to move from what a level of demand on other block. Now, I'm going to go to and look at here now. Look at this point now. Do you notice that when market broke out of this structure, market retested this zone? Now, let's look at the lower time frame and see what market did there. I just entered the 15 minutes time frame now. What are you seeing on this 15 minutes time frame? I've zoomed into the price action now. What are you seeing? Where is, ever since we broke this structure, where was the first pullback? On this lower structure, the first pullback to this lower structure, it is this. Are you seeing this black candle here?
Yes, I can see
Are you
it.
seeing this black candle? Yeah, so this move that you're seeing here was that market made the high, it made the low, then we continue going up. Do you understand? So this was the first pullback.
That's the fake one.
Yes. So
Yeah.
that's why I said that market came back down
To
into that
retest
first
it.
pullback
Yeah.
to retest this structure high. So this is your entry and this is your breaker block. Because if you now go to the 3 minutes time frame or the 5 minutes time frame, you're going to see a block there. Because this is a supply zone that failed now. You understand?
Yeah.
So this is how you're going to have your buy. This is how you'd have gone. Very easy. Now, if you notice something now, but then again, you will notice that this our entry is not looking like a better pullback, Abi. It's not
Yes,
looking
it
like a better
is.
pullback.
Yes,
It is
yes.
looking like that because it is not that time the 1 hour has already formed its own pullback. That it will not use to come to touch from what level of demand. Do you understand? So the
Yeah.
next time now, so the next trade we are planning for now, it is this trade because this one has happened. Do you understand? So we're
Mm-hmm.
now waiting for the next one that will not happen here. So now we're going to look for our level of demand that we can buy from. Now I am seeing this level here. This is a good level. But now let's go further to refine this thing because we know this is our inducement. Always go for there's a rule. Always go for the inducement. Like always go for the point of interest nearest to your inducement. Okay? Always go for the point of interest closest to your POI. No, always go for the POI closest to your inducement. Sorry. Okay. So now, in this case, since this is our inducement, so where's the closest point of interest? Because now we know we're looking for an order block. So this is the closest point of interest. So you'll be expecting market to come here right now and move up. Are you getting me?
Yeah.
So now to refine that place, I'll check the lower time frame. All right. So I can first of all fixate my first buys from this level of demand here. Okay. You can have buys here, entry stop loss below here. All right. And go to the upside 1 to 4 risk to reward. All right. Just like so. So now your own is to just like you will now be waiting for the trade to trigger. Now, because you know that inside the same demand zone, where is the next likely point for market to react from? Now, that one is not like more further um skill set because You want to now start dissecting these candlesticks, going lower time frame by lower time frame. Like now, for example, now I can tell you now that you see this level of, you see this long wick now, for example, now this long wick wiped out a lot of orders from this zone here. That's this long wick you are seeing wiped out all the orders from here. All right. So you see this long wick now. Inside here is going to be a very highly reactive level. Okay, this is going to be a highly reactive level from here downward. So here now cannot be like a second entry point. That's just like for if you are trying to catch the lowest price point. And now if these two entries can now not work again, like if they don't play out, automatically we notice that market is now going to reach out for the external range liquidity, which is this zone here.
Yeah.
Market is going to reach out for that zone. That's the external structure, because there's no reason for it to buy again. So then you can, let's say you took your losses here, since you don't know the direction, you cannot easily look for that same sell pattern. It must create itself. That is, if it not create, it's not going to move. So once you are seeing the highest get taken out, you are seeing your point of interest. So you cannot catch your sales and make your money back that you lost here. It is that simple. All right. So that is all you need to know. You should go and backtest this thing I just taught you. You have the recording, right?
Yes,
You should
yes.
backtest this thing I just taught you. So that is all you need to know. Okay. I should look into more examples. Let's look into more examples. Okay, let's look into more examples now. Let's map out market structure here. What are you seeing happening here now? What do you see here? We broke out of this high, right? Are you with me?
Yes, I'm with you.
We broke out of that high. Where was the first pullback? This was the first pullback.
Yeah.
Where are we going to mark out as our point of interest here? The breaker. Are you getting me?
Yeah.
If you had marked out the demand first, seriously, the market later came for this demand. It's not like you are wrong. All right, it's not like you are wrong, but you are going to be missing out. Look, we have marked out this breaker. Now market has used this breaker to go up. Where's our next trade? The what?
Okay.
The breaker.
Mm.
Are you getting that? Are you seeing how simple this thing is? The next one is what? The breaker. Okay, you see where market is reacting, right? Why? Because once we break structure, like now I'll focus on this level now, because now we are now having a new sweep and a what? Break of structure, telling us now that this is a strong low. Okay, so now we can judge structure by here. So now if you are looking at this whole move, break of higher high, now we can call this level a pullback. Are you getting me? We
Yes.
can call this a pullback. All right, this a pullback. That's the first pullback. Now if you are looking at that as a first pullback, market has already gone deep into the price action already. And aside sef, aside that sef, we have already used, if you are looking at the lower time frame now, if you want to look at the structure in depth now, let's look deeper. Now what are we seeing here from the lower time frame? Now you notice that on this lower time frame structure we broke this high. So when we broke this high on this lower time frame, where was the first pullback on this particular high here? This was the first time
Candle.
market came to
Yes.
retest that high. So market took out that high. Okay, so this candle here, this was the lowest region, that this was the lowest push the market made. All right, market came there. Then what do you see market reacting to here? The breaker. All right, so now since we have gone up here with that breaker on this first retest, you see several times market was always testing because it does not want to move from there again. All
Yes.
right, this
We're
time
always
around,
coming down and going back.
exactly, because it
Yeah.
wants to now reach out for the demand zone. What's your demand zone? What is your order block? Your
Yes.
last down candle before the up push. So just like that.
Wow.
Are you getting me? You will now catch this your sniper entry. Trade one, all right, from the breaker. This is your trade from the breaker here. Sorry, this is the breaker. That black the last supply zone there. So you will have your trade from here. All right, first trade here. All right, then second trade here. It is that simple with your stop loss
Very
below.
simple.
Are you seeing it?
Yes.
It is just to just understand it. See, don't cram it for the pattern. Yes, it's good to understand this pattern. You see how easy I'm drawing it now. At first, I was not understanding it like that. It's not easy to understand. Like it's like
You
this.
just
You
need
understand?
you just
It's
need
very
to focus on your breakouts.
just focus on.
Yes,
Yes, once it has breakout, just wait for that first pullback. Know
yes.
that
There's a
that first
workout there
pullback
in
is fake.
demand.
Yes, like now, look at this zone here now. Since we have already moved now, we have moved out. What am I looking for now? I'm still looking for same thing. I'm looking for same thing. I'm looking for same thing. Have I seen it? Okay, it did not happen here. It did not happen here. It did not happen here. I'm still looking for same thing.
It happened
Okay,
there.
same thing
See it here. I think it
here.
happened there. Yes, it happened there. Sit down. This down one.
Here,
I think it happened there.
this one here.
Yes. No. Come to your right. This long week here.
This one.
Yes, it happened there now. There's a breakout. I'm seeing a breakout here. Okay, no,
Okay, let
no,
me
it did not
analyze.
happen. It did not happen. It did not happen.
Wait, we break out of this structural high first of all. Higher high. This was the higher low that broke out that high. So here we break. This is what I call a break of market structure here.
Yes, that's what
I
I'm
see
saying.
it. So we broke structure here. So we broke structure there, and when we broke that structure, we have to switch to the 1 hour time frame. That piece of price action is noisy. Okay, this is it here. So when we broke this structure here, all right, market pulled back. So this first pullback, all right, would have been our target zone, all right, that we look to sell. What you notice now, this was a full pullback. Are you getting me? It
Mhm.
was a fully priced in pullback. Are you getting it now? It was a fully priced in pullback. So market has already absorbed a lot of orders. So that was a full blown move that you're seeing there. So that's why that thing did not play out. So market nine later treated it as this was a sweep. Now this is now the break of structure here. Now since we have already identified this sweep and this break of structure, now let's look at what was happening there again. Okay, let's look at what happened here. Okay, exactly. I've seen. All right. Okay. Now look at this zone here. You see that coming down here. Okay, they see the setup here. Coming down here, before when we swept this low, okay, we made a lower low, we made a lower high. This is a pullback. Now we made a lower low. Do you notice that we broke this structure here? So when we broke this structure here on this time frame, that structure there, if I should draw it out, you see that it's a structure. Okay, so that's high that got broken. Can you hear me?
Yes, I can hear you.
All right, that high that got broken there. All right, what do you notice happened? Market first of all retested the breaker as a pullback and now left that point as the first pullback. So now you'll be looking for areas of interest to buy from next. So what are you looking out for? I'm looking out for what? A demand zone. So your demand is your what? Your last down candle before the up push. All right. So now this is a refined demand. I will take this whole candle with the wick, all right, as a refined demand zone. Now, if you don't want to miss out on the trade, you take this the full like the body of the like the full down candle, so that you are going to be having a bigger stop loss here, all right.
Yeah.
And sometimes it reaches out of it reaches for the refined one. You can even refine it to just the wick, all right. But either ways, you understand. But just know that this is your last down candle before the up push is your what your order block. So just like that, you would have now caught these buys that happened here. Okay, it would have missed your entry at first, but later what did happen there? Market came there, boom. Are you getting it? So
Yes.
now look at what is happening here again. On this top now, when we broke this structure here, note we did not just break this structure, we broke another structure here again to the upside. Market touched it. Okay, market touched it. So now this was the first pullback. All right, this was the first pullback that happened here. So where would you have tried to take your trade from? Look at what I'm telling you. We broke out of that high, right? We broke out of this high. Do you notice that when we pulled back, at first, all right, at first, we missed this high. Here,
Mm.
market now came back down again. It was now when market now came back down and tapped into this level, we now move back up. So now we have already used the breaker. We know that we have used the breaker.